We are now trading circa the highest point of the day. So it's good going really. And there is a bit of a recovery in breadth as well, selectively. It's not, let's pull up the market breadth, the advanced decline ratio. And market wide is looking slightly different, but this is the point I'm making. Look at the deep difference between advances and declines at some point of time in the day. And look at it now. I mean, the advances, actually this number looks a bit off because clearly the advances are more than the decline. So let's remove this number, but clearly the market breadth has improved quite significantly. Bank Nifty 2 clawed its improved quite significantly. Bank Nifty 2 clawed its way back into the green earlier than the Nifty, by the way. The Bank Nifty did, and it is up 0.64%. So in some sense, banks are driving this. Mid cap and the small cap indices very quickly before we get to the individual stocks on the Nifty, and I will talk about UPL for sure. Mid caps in the green, and small cap index will come up on your screen. Margin in the red, but from the lows again, look at the kind of recovery and the pace of recovery. In fact, the small cap index is trading at the high point of the day. Now let's get the heat map up on the screen. And some result boys and some bounce backs that we've seen. So you have to admit that it's a day that belongs to pharma and agrochem in some fashion. Cipla has been a rock solid performer right from the start on the brokerage notes. So up 5% and steady at that level for the large part. But there is Divi's out there, which is up about 3.5%. There is also UPL, not a part of the index anymore, but has done really well. And we'll talk about that in detail. There is Asian Paints. Now, 4 of the last 5 sessions, I would reckon, Asian Paints has actually had a good day after the worst performance was over and most brokerages downgraded it. I think it needed that to bounce back. Look at that move today, 4.5% up for Asian Paints. The Adani twins, both Adani Port and Adani Enterprises, doing really well in the session today. And I think 1, it's a general market bounce back, but 2, also this whole announcement about investments into various businesses that has come in from the group, also helping the stocks in the session today. Some strength in HDFC Life, Britannia, and Hindalco up about 1.4%. I think the key is what some of the others have done and what HDFC Bank is doing. On the flip side, Tata Motors continues to sulk 8%, not a whiff of a bounce back despite the fact that the market has come up, which shows the extent of selling that's happening in Tata Motors. And to an extent, some PSUs, the likes of BPCL, Coal India, and ONGC, amongst others, looking slightly wobbly in trade. But Tamanna, 1, the bounce in some of the names, and 2, the result reactions in agrochemical. We saw in the morning Sharda Cropchem being up 8%, UPL was up 7%, and then again after the results has shown some spunk. So pretty good going into some of these names. Yeah,
UPL is exciting, definitely, and I would say that I don't know how much we can say I told you so, but Amit Shah definitely told the market so, because if you're wondering what changed through the day, and we'll play out that series of bites, the first 2 exclusive to NDTV, where Prime Minister Modi and Amit Shah, the Home Minister, spoke with NDTV network in the last 24 hours. Those were the comments that seem to have bolstered the market, especially the Home Minister saying that wait and watch and see what happens on the 4th of June after the results, because if that was one cloud over the markets, it's certainly lifted. Let's come to specific stocks. We showed you what's happening with UPL. I want to talk about ABB, because if you're looking at stars of the show today, and that star cast is quite varied, ABB is definitely on top of that list, 11% up. The margins are better than expected. The management commentary has been positive. That stock completely, outselling and outrunning the expectations that were with it. So ABB doing great today. Dr. Lal Path, again, I want to pull up. Dr. Lal Path, Piramal Pharma, we're talking about result reactions, and these are the companies that are doing quite well. Dr. Lal Path, second day in a row. We spoke with the management also today. Their expansion plans in tier 3 cities of northern India seems to have enthused the markets. Piramal Pharma off the highs of the day, but still rock solid, up about 3% after good numbers. On the other side, if I look at a BOI, I look at a VIP, I look at a Sapphire Foods. So again, you're seeing very, very clear reactions to results coming in. 10% down on a Bank of India. A VIP also not looking that great, about 5% down. And likewise for a Sapphire Foods, which had a mixed sort of a run in terms of how brokerages looked at it. Most weren't too happy with the numbers. Nuvama was the outlier. We talked about it this morning, 3.5% down on a Sapphire as well. So very clearly results focused kind of afternoon, but the general mood, I wouldn't say back to a complete upbeat, bulls in charge kind of a scenario, but you have to see it in comparison and definitely much better than what it was looking like mid-morning today, Niraj.
Most certainly. Let's take stock of that situation then, Tamanna, and try and get in our guests. And of course, we'll make you hear all that's happened on the political front as well. More so the assurance, if you will, that has come in for the markets. Firstly, get in our guests today, Hemen Kapadia of KR Choksi Stocks and Securities on the technicals, Pankaj Pandey, Head of Research at ICICI, Director on the fundamentals. Gentlemen, thanks so much for joining in. Hemen, how does the pullback look today? Convincing enough to initiate longs or still on the sidelines maybe?
A very good afternoon, Niraj. Thank you for having me on the show. It's always a pleasure. Yes, I think I totally go with your statement that the pullback looks good enough to initiate long positions. One gets the feeling that the 1,000-point sell-off that we witnessed over the last few trading sessions, maybe the last week or more, seems to have halted for the time being. 21,834 was important support from my point of view, Niraj, and we've taken support proximity on that level. So I'd say, yes, it warrants selective longs. The weeks remain disconcerting, Niraj. We've spoken about it every week for the last few weeks, I think. And the weeks at 21, it's like, that's hurt, obviously. Now, the bounce is underway. I believe Nifty is at 22,118 right now. With a few permutation combinations, we're going to go to 22,400, 22,500 probably this week itself. But the VIX needs to cool off a bit. But yes, what you said, I'd go with that. It is worth going selectively long in this bout, Niraj.
All right. Before we get to more comments and more stocks that we want to talk today, I just want to play out for you the kind of commentary that's coming in from the political arena. Remember, right now, at least the political scenario and market movements are quite closely interlinked. You're in the middle of phase 4 elections. And phase 4 polling has been going on for the last several hours, midway, so to speak. And the uncertainties in the market were seen in the India VIX. Now, in the last 24 hours, two exclusives on the NDTV network, Prime Minister Modi and Home Minister Amit Shah, have spoken about the election expectations and the impact on markets. Listen in.
भारतीय जनता पार्टी और एनडीए को 400 पार कराने का दृढ़ संकल्प है और देश ने पूर्ण बहुमत वाले भाजपा एनडीए का मॉडल देखा है और वह गतिशील सरकार देखी है, निर्णायक सरकार देखी है, रिस्क लेने वाली सरकार देखी है और उसके आधार पर हम आगे बढ़ रहे हैं।
16 बार इससे भी बड़े गोते स्टॉक मार्केट ने लगाए। इसको चुनाव के साथ जोड़ना नहीं चाहिए। खैर, अफवाहों के कारण ऐसा हुआ भी होगा तो 6 जून के पहले आप बाय कर लेना, 4 जून के पहले वो शूट अप करेगा। 400 पार होने वाला है, मोदी जी की स्थिर सरकार आने वाली है तो निश्चित रूप से बाजार ऊपर आएगा।
You'll have to wait and see in the first 100 days and the budget which will come in that period. But the fact is, in a way, a certain base has been created. I see public investments continuing. I see greater enthusiasm for private investment. I think a lot of people are looking after June 4. They will see those numbers, and I think that will strengthen the resolve to invest in this economy. I definitely see much more foreign investment coming in. So right now everybody is like, okay, let June 4th happen and then I'm going to take the call.
Okay, so let June 4th happen. That seems to be the messaging coming in. The conversation around 400 seats is also back, at least in the political messaging. Pankaj Pandey, I just want to understand, has this helped calm nerves in your view? Because if I look at the intraday chart of the Nifty, you clearly have seen a change in mood.
So hi, good afternoon. Thanks for having me. I guess it has definitely sort of helped in terms of intraday recovery, what you see in the markets. But our sense is that, you still have a good number of trading sessions ahead of us till the results sort of come out. Our sense is that election outcome-led nervousness is going to be there, and that is would lead to consolidation in the index, probably in the range of say 21,700 to 22,400. Historically, over the past four elections, we have seen Nifty during polling phases witnessing a 6% kind of a correction. We are already done at 4%. So possibly some bit of a consolidation on both the sides is very much possible. I don't think we are going to get a decisive move till the time election outcome is in front of us. Till that time, I think you will continue to see stock-specific move depending on how the results pan out. I think global cues, domestic inflows, all of them have been very positive, but markets have not been reacting to it. I think market is largely following the election-related news flows at this point in time, and which is why we would want to believe that the consolidation is going to sort of pan out for the next 2 weeks at least.
So fair enough, we might be having a relatively decent afternoon, but the uncertainty doesn't end. Let me just pull up the India VIX, and that actually outlines what Pankaj Pandey is saying today. So that's still about 11% up. And you have seen a big jump up in the last few sessions in the India VIX. It's at 20.54, has been above the level of 20 for the first time in 7 months. That's the highest level in 7 months. So it's not as if, all is well yet. Let me come to the stock-specific story. And Hemen, I have to start with the Tata Motors. I mean, the kind of drubbing that the stock has taken is quite something today. It's still about 8.5% down. Now the question is there a bounce back that you see at some point from 960, 95? Does it become attractive at this point?
Well, frankly speaking, Tamanna, how long can you avoid the laws of gravity, right? Even Newton would agree to that. I mean, stock goes up from 380 to 1060. Almost 1 week. Yeah, there were a couple of months where it took a small breather, but nothing significant. Not a proper technical time price correction, as I would put it, Tamanna. And now we are tired. It's obvious that there is medium-term top which has been formed. There is a distribution pattern which has happened, and now we are breaking down from there. 930 is important. If it closes below 930, I think this correction could deepen. There's a bearish gap today, which is not a good sign. Until this gap doesn't get covered up, I think it is going to play the villain, and I don't see it getting covered up in a jiffy. So it's taking a breather. It's had a phenomenal move. The long-term charts still seem okay, not an issue. But currently, I think it's overdone. I mean, the way it has moved, the quantum and the speed, somewhere it has to cool off. I believe the cool off is on. So I wouldn't be unduly worried even if it breaks 920 and goes down some more. I'd look at it as a opportunity for a long-term buy, but currently, if you're saying anything, I'd avoid the counter. I don't see any compelling technical reason to buy, except for the fact that the cash market volume is 5 CR. Now that's huge, and we still 45 minutes away from the close. When such a big volume happens and the low doesn't break for the next 5 trading sessions, that means stronger hands are bought. But it's a bit too premature to take that call. I'll just stay away for the timing. Figure setup remains unequivocally bullish.
Okay. So 920 onwards is where Hemen sees the opportunity, and the volumes is an indicator. Pankaj, your take on a Tata Motors, does it deserve the kind of beating? Because the numbers on the face of it are not bad at all. The outlook perhaps on commercial vehicles, etc., was a little of a dampener. What would you do with a Tata Motors at this point? Is it an opportunity to buy?
So, from a number perspective, I think the numbers are quite robust. I think the company is walking the talk in terms of debt reduction, especially on the JLR side. I think the only challenge what I see is that we have seen good recovery in the CV as well as PB segment in the last 2 years. Given the impending elections, there is an expectation that demand is probably going to sort of consolidate in the near term, which is why you don't see much of a trigger for the next 1 or 2 quarters. So we have been liking this stock for quite some time. So our ratings hold at this point in time with a target price of 1120. In case if we this stock reaction looks a bit surprising, I mean that is what we see in a lot of cases, also other even banks as well. So I think stock reaction looks a bit exaggerated, but our sense is that overall post these 2 quarters, we don't have much to sort of complain in terms of how the company has been doing. In fact, on the EV side, they are looking to sort of volumes of about 1 lakh. Plus, our sense is that if the budget happens on expected lines, the CV industry also would witness better days ahead. So fundamentally, we don't find much of a problem in the stock, except for the fact that next 1 or 2 quarters triggers are missing.
Okay. Well, that's on Tata Motors, and NDTV's Mugdha Mishra spoke to Tata Passenger Electric's Chief Commercial Officer Vivek Srivats on Tata's EV plans and sales outlook for FY25. Listen in.
So in Bharat Mobility, we had already shown this, and in the previous Auto Expo as well. So we have a couple of products confirmed already on the EV side, which is the Curve and the Harrier EV. Curve will also come in petrol and diesel, and it would be in the market before the festival season. I think it is definitely a challenging year because 2 reasons. One is, all the pending waiting customers have, I think, dried up. Most post-COVID, there was a lot of customers. There were a lot of customers who wait. Network stock itself across the industry has gone up. So that buffer of, being able to fill in a network pipeline has also gone away. So the entire industry this year is going to depend on fresh demand generation without any buffers in terms of filling up pipeline. So it is going to be difficult.
It's going to be difficult, and it's showing in the way Tata Motors is reacting. The stock is facing some difficulties. By the way, just very quickly before we get to ABB, Aditya Birla Capital numbers on your screen as well, and the stock is up about 3%. NBFC disbursements up 16%, so that's not done too badly. There's a bit of a spike there for the stock, and the loan portfolio is up about 31% YOY. Okay, but the stock that deserves all mention is ABB for the right reasons. Over 10%, in fact 11% on the back of a robust margin beat. Now, there is of course a con call that has happened as well, and Anushi joins in with the key details of what is the standout when it comes to these numbers. Anushi.
So now if you have to look at ABB's numbers over here, quite a beat on margins, as you've mentioned, revenue about 28% of growth, which was mainly led by its process automation and electrification business. But it's the EBITDA which stands out, 98% of growth over here, margins moving up to 18% compared to 11% here. A couple of reasons that we have seen as to why this margin boost is happening. First, the company in its con call reported that its material costs have gone down below the 60% level, which has not happened before. Again, we have to notice that the orders that took place last year, they had a higher share of raw material cost included in, which has supported this kind of growth we are looking at. Again, another aspect is the higher share of the automation business, which has supported this, and even higher exports, wherein the margins are comparatively better. So again, that is to be focused over here. Another area, apart from that they have mentioned going forward in the con call, which was important, is the growing significance of their data centers, where they're going to be doubling down their efforts over here. Focus areas, again, say about a 15% of growth going forward. And even if you have to look at electrification motion, that would be on a sweeter spot owing to the building and infra theme that is playing out. Now, if you look at the order backlog, that has seen about a 15.8% of uptick in the orders, while the order backlog about 25% growth. So 40% of the orders that we are looking at in the backlog, that comes from their long-term projects, which are in the railway and process automation business. Now, regarding these, earlier in the day we had discussed, but just to reiterate that, now a couple of brokerages having a strong buy over here. Motilal seeing about an 18% target, with the EBITDA having, with its EBITDA margin at an all-time high. Again, margins were led by the superior product mix as discussed earlier. Even Jefferies see about a 27% of an uptick, with EBITDA seeing no one-offs this quarter. Again, renewables, we have to look at order inflows, which are supposed to be having a higher growth pickup in the H2 of next year. Again, renewables is like a moderate growth area compared to a high growth area, so that remains on watch out. So these are the couple of reasons as to why ABB India is buzzing in trade today.
Okay, ABB is buzzing, no doubt about it. Jefferies has also retained a buy. Pankaj Pandey, ABB looking rock solid to you too?
Well, yes, I think ABB, nothing much to complain. I think 18% kind of a margin was definitely a surprise. And even management commentary that they are going to maintain margins about 12% as quite conservative. I think that's the only challenge with ABB has been it's very difficult to sort of justify a stock like this. It's becoming a concept stock. So even we are taking margins of 17%. The stock is trading at 90 times or so. So it's very difficult to sort of justify a buy. But like I said, it is one of the companies which nobody wants to sell, and everyone, whosoever wants to sort of have an exposure on the capital goods or capital expenditure theme, I think this is one of the prominent stocks to sort of play. So if somebody already has it, I think they should hold. I am not too sure when it will sort of correct sufficiently enough for us to give a buy.
Hemen, right now at these levels, and ABP does look quite exciting. Would you book profits? Would you buy? Would you accumulate? What would you do?
I'd stay away, Tamanna. Too late, too early. Too late to buy, too early to sell. There is nothing which warrants a sell at this point in time. Whether you look at a short, medium, or long-term time frame, Tamanna, it's in an uptrend on all counts. So there's no question of shorting. I don't see any logic to book profits. I mean, booking profits is never a bad idea. Better to take something home. There's a positive gap. There's a bullish gap today, which I think would hold in good stead, and that would provide support. So frankly speaking, I'd say stay away. There's nothing much to do as far as ABB is concerned. If I were to go for a punt, I'd go in for IT. I think that's underperformed, can surprise. So any IT stock would be a slightly off point, but that could be a good punt. ABB is, I believe, run up significantly. I'd stay.
The only thing is, as we take the break, if indeed they clock in this 18% margin each quarter, because they in the con call have said that there's no one-offs in the margins, imagine the beat that they bring about on the profit growth front for each of the next 3 quarters. I think that is something to watch out for. Nevertheless, take a break on that note. Stick around. We delve deeper into today's market movement, talk about some losers as well on the other side. Stay tuned. Back with India market close right here on NDTV Profit. And yes, the markets have recovered and done very well, and a lot of stocks have flown. But there are some losers, as we said. So Tata Motors is one key name. But look at Syrma SGS, down about 17%. And you know, everything in this EMS space does well until it stops doing well in one quarter because of bad numbers. Now, this may not necessarily last, because remember, Dixon from 4,500 fell down all the way to 2,500 at a point of time 2 years ago when the numbers went a bit kaput and then really rose. I'm not saying Syrma will do the same, but currently Syrma is undergoing the pain of missing out on the numbers in some fashion. The stock is down 17%. Pankaj Pandey, do you have Syrma under your coverage?
Niraj, we don't have a coverage on this thing. I think so. That is, see, the challenge with this space is that if your margin is volatile, the ROAS, becomes quite volatile. And it's very difficult to ascribe value then. So that is the entire challenge with this segment. And nobody knows the kind of pricing power they have. That is what we have seen in case of Dixon and even in case of Amber.
And that's a fair assumption. Now, just before you get to the management though, Hemen, this 16.5% downside on Syrma, what kind of downsides does it open up?
Well, frankly speaking, I thought 450 was rock solid, impregnable support, and it just about sliced through that rather easily, I'd say. So it's a relatively new listing, Niraj, not too much of data to go on. But this does not augur too well, and the next support is far away. It's at 380. So, but once again, the volume spike has been huge. So same logic applies if somehow this level holds for a couple of trading sessions, which it might. I'd say things should be okay, but till 450 is not reclaimed, it's going to remain messy and weak and wobbly. Niraj.
Okay. Well, the company, as we said, reported the numbers. Hear out what the management had to say in an interaction with NDTV Profit.
See, the EBITDA margin correction is essentially because of the change in the product mix. Per se, if I was to look at the margins vertical wise, they are almost stable and there is no deterioration in that. Domestic demand led by the consumer is growing at a scorching pace. So when I say that we grew by about 55% last year and my exports grew by about 26%, this means my domestic business, which is primarily telecom, consumer-related business, has gone up by a significantly higher percentage, and hence the compression in the margin percentages. Going forward, we are very confident that in the coming year, we'll be able to sustain the margin at 7% of the revenues. And thereafter, in the coming years, once my overall capacity, efficiency, utilization kicks in, there could be a marginal accretion to that. But this year, we maintain our guidance of about 7% EBITDA margins on a yearly basis. Quarter on quarter, there could be variation based on the product mix. But on a FY25 basis, I am very confident that will be 7% minimum of the EBITDA margins.
All right, the other focus on Dr. Lal PathLabs, that stock has also done fairly decently after their steady earnings. We in fact had the opportunity to speak to the group CFO Ved Goyal on the key growth drivers in Q4. Listen in.
We are happy to announce that the margins has, decent margins this quarter. There were 2-3 things which has, one is of course our expansion overall, which is deeper in tier 3 and below, has responded well. Again, the growth for this quarter is 11%, 11.1%. And if you see, then product mix has also gone up. Our SwasFit in this quarter is highest, 24% contribution from SwasFit, which is highest ever. So these 2 things has contributed, and plus, overall volume growth also, if you see, is inching up compared to last quarter. So we are confident that we are able to sustain these kind of numbers.
Hemen, any views on the stock? Dr. Lal PathLabs had a good run for 2 consecutive sessions, if I count Friday and today. Do you see a further up move?
I think so, Tamanna. It seems to be breaking out of this range. But the cash market volume seems to support it. 17 lakhs shares cash market volume. This is obviously not delivery marking, but this is probably the highest volume seen in the last 10 months or so. So, yes, but formally, the level is 2495. 2520, not 2495, sorry. We need a closing about 2520. I believe that's very much possible looking at the price volume action today. And we should be heading towards 2650. And at the risk of sounding overly optimistic, even 2750. So it's ticking all the right boxes. The short to medium term charts have turned positive, indicator support. Long term charts, things are turning. So fingers crossed, it's looking better.
Pankaj, your take on the diagnostic space, and I want to pull up what's happening with the Vijaya Diagnostics also. Of course, Dr. Lal also doing well. Vijaya Diagnostics today taking a tumble, down about 4.5%. But anything you like in this space and any view on this specific company?
So diagnostic as a space, we're not tracking, so I will not be able to comment. But of late, whatever healthcare numbers have come out, I think Cipla numbers look quite robust to us. I think the management commentary or the aggressive EBITDA margin guidance of 24.5% or 25.5% what they're given for next year is quite sort of good. And this is again irrespective of the fact that in case if there is an adverse outcome from US FDA, because I think they already have a plan B in place. Largely because US growth is again expected to remain robust and India growth is also good. So I think Cipla numbers came out good. We have a target price of 1645 on the stock.
Well, Zomato, Tamanna, you've been ordering.
If I'm being honest, I actually, order more from the rival. But yeah, Zomato has its moments as well. There was a tweet from Dipinder Goyal yesterday saying that their highest ever sales were for Mother's Day. But they've not needed that boost clearly as far as their numbers are concerned. Net profits at 175 crores versus losses of 188 crores. Just the first cut of numbers on your screen. Revenue is doing well, up 73%. We'll wait and see what the breakup is and how much of that is Blinkit, how much of that is Zomato, and what are the other sort of parameters coming in. But those two numbers, I'm seeing the stock take a tumble. And can we just pull up? Yeah, there's the chart. Stock's not responding too well and has been seeing quite a sharp fall as those numbers are out. We'll wait for details. Down about 3% now. So just in the last couple of minutes has shaved off about 1.5% on Zomato. Revenues maybe a tad below estimates, up about 8% is the figure I just saw. It's a tricky one, isn't it, Niraj? Because the way the company has also chosen to count its EBITDA margins had come up for questioning last quarter as well. 4.5% down now as we speak. So Zomato really taking a bit of a knock. To be fair, it's run up a fair bit as well. Yeah,
but it'll be interesting to know if anything within the presentation has spoiled it, because I'm just broadly thinking the PAT number, they've spoken about how they will get back to a profit number, QOQ as well. It's a 175 crore number versus 138 crore. It's not looking bad, and this is in a non-IPL quarter that they've done what they've done. I would presume that the IPL quarter will probably be more, but clearly something's disappointing the stock. Remember, after hitting life highs in Friday's session, down about 5% now. Pankaj, just wondering why this disappointment with Zomato? Do you look at it fundamentally?
No, Niraj, you don't have a view on the stock fundamentally.
Okay. Well, of course, the market cap is at 1,75,000 crores. In some sense, that's not a very healthy PAT number per se, but maybe there's more to this. Maybe what we do is take a break. We come back from the break and try and analyze Zomato in greater detail. It's actually falling like a knife through butter, really. 6% down now for Zomato. We'll talk about this on the other side of the break. Stay tuned.
right, it's all about Zomato. Before we went into the break, Niraj said it's like butter cutting through knife. It's like orders cutting through your wallet, or like calories getting added to your waistline. However you see it, Zomato down 7% now. Sharp cut in the last few minutes as the numbers have emerged. Now, what is bothering the street is really the question, and why are we seeing that kind of a hit? The Blinkit numbers will be interesting to see, and that is where the whole buzz about Zomato really lay, and the excitement lay in a Blinkit. Their revenues on the face of it, okay, about 8% up, consolidated QOQ. EBITDA up 69% consolidated QOQ. No real apparent reason why Zomato is seeing that kind of a hit. EBITDA margin at 2.4% versus 1.6%. Remember, for a lot of companies in this space, the question is about profitability and how close you are to profitability. And that seems to really elude the company so far. What's interesting, Niraj, and also a bit of a question mark, is that, remember, Zomato has been on the top of pretty much everyone's wish list in terms of all of the big brokerage firms as well.
Yeah, and it's done really well. On the face of it, the numbers seem okay. I don't know if they are just below estimates. I don't know if there were Bloomberg estimates to this. Unfortunately, we don't have that access, but it certainly seems that there is some issue out here for Zomato, which is plaguing the stock. Unfortunately, can't place my finger there, but clearly market knows it best. For now, a bit of a disappointment there. Again, a stock which doesn't really have too much of history, but now it's been listed for a sufficient time. What do the charts suggest? Hit life highs in Friday's session and down today.
45 to 207 linear move. Interesting thing is that in this whole move, which started when it bottomed out in January 23, Niraj, if I see the charts correctly, not a single month has it broken the previous month's low. Just 1 month it ended below the previous month's close, but it's not broken the last month's low even once in this entire time frame. So it's been a linear move, one-way move. Once again, I believe it's more to do with stock getting tired because it's had a phenomenal move, frankly speaking. 182 is important support. I don't think that breaks. If that breaks, yes, the correction will deepen, and the chances of it slipping into an intermediate correction are high, especially 182 break. So today's move is just a one-off thing, and I don't think anything changes. But yes, now the volume generated by this technical downward bar reversal, which is on the verge of forming today, Niraj, that would mean that 205 now needs to be taken out if we expect Zomato to continue. So I believe it's stagnated. The range is between 182 to 205. If 205 gets taken out, everything is hunky-dory. If not, I think it will fall under its own weight. Tired, overbought, could go for a breather. Limited data, like you said, but as of now, it's been a beautiful one-way move, just a bit tired.
Yeah, and likely maybe just looking at the Blinkit numbers, or it has to be that some of these numbers are slightly below what the estimates are. There's no other reason why this would happen. Anyways, so that's on Zomato, but there's a market beyond Zomato out there, which also we need to talk about. There's a clutch of stocks out there which have done well. UPL, a case in point, 5% higher today, if I'm not wrong, for now 6% higher. By virtue of the fact that it's beaten street estimates quite convincingly. And wonder if agrochemicals at large is looking like a pocket which is strong. My colleague Varsha is going to come and talk about the chemical space, but agrochem stocks, Pankaj Pandey and UPL in particular, what do you make of the numbers? I mean, why this thumbs up to UPL a day after it had clocked in a 7% gain? So not only was it up 7% in Friday, it's up another 6% today post the numbers.
So UPL don't have a specific coverage, Niraj, but overall, our sense is that chemical is one space which has not done well over the past 2 years. So obviously it's oversold. And I think some of the numbers which have sort of come out, say for example, we have turned positive on Gujarat fluorochemicals, largely because the commentary, what we are sort of picking up now is that, say, the biggest segment, which is a fluoropolymers, which is somewhere about 57% of their sales. I think they're seeing prices being stable there. The volume recovery is started to sort of happen, and they're not seeing competition in some of the segments from Chinese. And in general, what you sort of get a sense is that the inventory or the excess inventory is out of the system and prices have started to stabilize. You don't see further dumping happening from China. So worst is largely behind us, and things are a bit of a green shoot is visible in some of the other pockets in some of these chemical companies. And which is why I think selectively one can be positive. Rallis, I think, is yet to sort of display that kind of a numbers. But in general, yes, one can be selective in this entire chemical space, be it agrochemical or chemical in general.
Sharda Cropchem should come up on your screen. Let's see if that one is still holding on to the gains that it did. UPL is up 6%, but Sharda Cropchem is the other one, 7.5% higher for that one. So really good going by UPL. I mean, quarter on quarter, big improvement in margins, right? Other expenses was 36% versus 54% in the previous quarter. And when you see that kind of performance, EBITDA margin last quarter was 1%. It's 13% this quarter, and I think that is the point that for most of these agrochemical companies or chemical companies for that matter, we know that pricing YOY might be lower, but volumes are looking strong. And if sequentially there is a bit of an improvement, then you would want to extrapolate that kind of an improvement into the quarters ahead. So volume growth plus sequential improvement effectively leads to the kind of uptick that we're seeing into some of these chemical/agrochemical stocks. I mean, UPL or a smaller one like Sharda Cropchem or some of the others, anything that stands out for you on the charts?
UPL has found a medium-term base, Niraj. It's 3 years, 2 years, 11 months to be precise of underperformance. It's fallen off a cliff from 850 to 440. So it's almost become half over the last 3 years, doing nothing. Has found a base over here. The range is between 450 on the downside and 515 on the upside. It's in the throes of a strong rebound. 2 crore plus volume today, that's 2 crore 42 lakhs is big. It's close over the 55-day exponential. Everything seems to suggest we're in the midst of a corrective bounce, which I believe, I think it looks like it's going to sustain above 530. If it does, it opens the doors for a move till 560 and maybe even more. So 3 years of hatching eggs, doing nothing. The recovery is going to recover further. So notwithstanding the move which has happened today or over the last 2 trading sessions, I still feel it has more legs for an upside, Niraj.
Oh, I love that term, hatching eggs and doing nothing. I haven't heard that in a while. I mean, nice to hear that. What is definitely not hatching eggs is Zomato. Some recovery from its sharp knock and a little more details on the numbers that you're now seeing on your screen. So that's maybe getting a sense of why the panic. From what we're learning from our research team, it's a miss in EBITDA and PAT, which has hurt the stock. It's a beat on top line basis consensus numbers, but on EBITDA and PAT, it's hurting the stock. So margins are at 2.4% versus an estimate of 3.4%. EBITDA at 86 crores, fine, but the estimate was 118 crores, and revenues were also slightly higher than estimates perhaps. So that maybe is what is hurting. Even a net profit of 175 crores has come in versus an estimate of 187 crores. So maybe the point that when you have that much of a upswing and a good mood and a good conversation around a stock, but it doesn't really then deliver on the numbers, that's what you expect to happen. Like even the food delivery uptick was just about 2% from what I saw on our flashes right now. So maybe that's the story as far as Zomato is concerned. But some of the other counters that have been buzzing in trade, and I just want to pull up the pharma pack and a Piramal Pharma to be specific. Cipla doing well today, Piramal Pharma among them. The entire pharma index actually having a pretty good day. I'm going to come to you, Pankaj, on Cipla first. Now, pharma could be seeing a good day because of a defensive move, either way you see it, but Cipla, in terms of its numbers and the kind of brokerage notes we have seen today, seems like the concerns have eased about what happens after FY26.
Correct. I think for Cipla specifically, we have increased the target price to 16.45. I think what we are sort of liking is the confident tone of the management in terms of guiding for 24.5 to 25.5% kind of a margin, and despite any major sort of launches or one-offs. And they're also sort of penciling in the fact that in case if there is any US FDA-related adverse outcome, I think that is not going to sort of dent the numbers. So our sense is that over the next 2 years, we could easily see 11% kind of a top line growth and 21 or 22% kind of a bottom line growth because the growth in key markets like US and India looks intact, and respiratory is the segment which they want to sort of continue with. So no, nothing to sort of complain in terms of Cipla numbers. We continue to remain very bullish on this stock.
Cipla, then while Vijaya Diagnostics may be down, but some of the others like Dr. Lal, Metropolis, etc. have not had a bad move. Look at that. I mean, Lupin is up about 5.5% too, Aurobindo 4%, Divi's, Gland. Some very strong moves there. Very few pharma names like Laurus, Biocon, etc., which are in the red, but a clutch of names doing remarkably well in the session today. Yeah, Hemen, you track the Adani twins closely. You've been very constructive on Adani Enterprises for a while now. It's not moved per se. Today, both these stocks have shown this 2.5% uptick. Could there be more?
I think so. Frankly speaking, the technical promise that Adani Enterprise showed, Niraj, it briefly fluttered positively before it sort of came off. I mean, there was absolutely no logic for an underperformance happening. But anyways, like you said, it's taken support on the 55-week exponential moving average, Niraj. There is very strong support at 2760. The volume spike today is highest, Niraj, since 18th March. So if it's taken support on an important support and the moving average volume is highest since 18th March, so that's almost 2 months, I believe a rebound is underway. The first headache for the rebound is 2950, Niraj. But yeah, I believe a short-term bottom has probably been formed. We need probably another 2 or 3 trading sessions to confirm this, but I believe that's happened. About 2950, a further upside to 3020 seems possible. So time being, I think the downside seems to be capped as far as Adani Enterprises is concerned. And if you're speaking about Adani Ports, it had outperformed, posted a new high, relatively stronger support at 1240, bouncing back good. Resistance at 1340, about 1340 can surprise.
Okay, well, a 3% apiece for both of these names, so they have done well for themselves in the session today. What else? You know, Tata Motors isn't the only loser, of course. We've spoken about Syrma SGS as being the one. Wonder if the likes of Dixon or an Amber and others are also looking a bit soft, though Syrma can't be a driver of that, but Dixon is down about a couple of percentage points. Amber flattish in trade, and there are a clutch of other names, of course, now within that EMS space, about 9 stocks within that bucket, and we probably want to watch out for some of those, if not all. Pankaj, what auto stock would you be a buyer in currently?
So Niraj, if you look at from Tata Motors number, what is coming out clearly that the CV and PV is expected to consolidate given the fact that they've done well. I think the only segment left is two-wheelers. So at a peak, we sold somewhere about 2.1 crore two-wheelers. This year, we've closed at 1.8 CR. So there's still room for upside, and which is what you're sort of picking up from both, be it Hero MotoCorp numbers. The company is going to deliver double-digit kind of a lower double-digit kind of a top-line growth. And even for Eicher also, we've been sort of expecting the recovery, especially in the premium side. I think that looks more believable at this point in time. So we feel that two-wheeler as a space within auto is relatively better poised, and both these stocks look good to us. I think in Eicher, we have put a target price of 5,600, and in Hero MotoCorp, it's about 5,500.
Okay. The other one which is really surging is BEML. Actually, the top gainer on the BSE 500 is BEML, up 15% with the margins expanding. That stock has had a really good move. Pankaj, do you have coverage here? Did you look at the numbers of BEML by any chance?
So, Niraj, we don't have a coverage on this, but some of the names what we are liking is something like Engineers India, because it's a good proxy play on the overall capex done by PSUs. Valuations are attractive and return ratios are good. I think the turnkey project segment is going to sort of contribute less, and the consultancy is going to contribute more. So, obviously, it's better margin profile. So, Engineers India is what we sort of like as a good proxy play for overall capex by the PSUs.
So BEML up 15%, and Hemen, I want you to come on BEML, but I also want you to take a chance at Siemens, because I wonder if it's the ABB effect that is showing into some of these MNC names. I wonder if Honeywell Automation is the other one that is also maybe active. I don't quite know, not as much, but remember they're in the same bucket of sorts, and if there is pricing power for ABB, maybe some of the others might also have some. Maybe wrong to extrapolate that, but keep that in mind. Remember, ABB, the management, will be on NDTV Profit at 4. But Hemen, come in on BEML and come in on Siemens.
I'll start with Siemens first, and I think that extrapolation that you're talking about, frankly speaking, makes a lot of sense on charts. Because whatever you said in terms of fundamental in the extrapolation is translating into exact price action on the chart. So Siemens, 4 years and counting, 4 years and counting. Phenomenal dream move, sub 1,000 to 6,600, and it still doesn't seem to be in a mood to let off. So, frankly speaking, I think it's a buy on every decline. It is in the throes of a very strong bull market, and I don't think that changes in a jiffy. So, what's good is good, remains good. So, makes a lot of sense, Niraj. I think it's a buy on dip sort of a stock, frankly speaking. And coming back to BEML that you mentioned, I mean, that is, frankly speaking, a bit surprising. What looked like a possible rounding top has been broken through on the downside, and volume is humongous, 32 lakh shares. I don't know when last such volume happened, and that's happened. It's happened at least 10 months ago. So huge volume, and yes, I'm assuming these levels hold. The level to watch out for is Niraj, 3677 swing high on 24th April, 3683 swing high on 3rd May, and now we've taken both of them out with higher volume on the same day. So if the level holds, assuming those levels now become a base, if we're seeing BEML heading towards 3,900 and more, Niraj.
Well, some good going there for some stocks, but agrochemical is a space in focus. Keep in mind, viewers, and that is what we should be focusing on in moments from now. Actually, take a moment to thank both our guests, Pankaj Pandey and Hemen Kapadia, for joining us today and giving us your thoughts. Really appreciate your time this afternoon, gentlemen. And while we are about 5 minutes away from close, I think there is a special focus that should be laid on chemicals and agrochemicals in the session today, simply by virtue of the fact that some of these stocks are either showing promise in the numbers by virtue of volume growth or showing a promise in the way the price movement has happened. Look at Agrochem, Sharda Cropchem, or UPL. Now, my colleague Varsha has analyzed all the chemical companies. She joins in to give us a quick synopsis of what stood out in the chemical company results thus far. Varsha, what stood out?
So over the weekend, we received 3 to 4 chemical companies who reported their Q4 FY24 numbers, wherein starting with RT Industries, if you see, revenue was up 7% year on year. Now here, we need to see what is quarter-on-quarter growth also, because we need to see whether prices of the chemicals are improving quarter-on-quarter. So if you see for RT Industries, the company did report 2.3% revenue growth quarter-on-quarter. Margins were 16% versus 15% last year. Now, we did speak with the management wherein they are expecting EBITDA, FY25 EBITDA to be in a range of 1,400 to 1,700 crore, and they are expecting volume growth in FY25 to be 20 to 25%. Then we have AMI Organics, wherein all-time high quarterly revenue they've reported of year-on-year growth revenue of 20% and 35% quarter-on-quarter, and the growth was driven by strong volumes. And if you see that they are targeting a revenue growth in the range of 25% in FY25, then Sharda Cropchem overall volumes, if you see for this company, have increased 24% year-on-year, out of which agrochemicals grew 28% year-on-year, the volume growth. And if you see the revenue for year-on-year, they've degrown due to lower product prices, but quarter-on-quarter they have done exceptionally well. And their material cost for Sharda Cropchem, if you see, with respect to revenue was 65% versus 74% in Q3 FY24. So overall, if you see, all the three companies have reported good volume growth, and sequentially the numbers have been good. So maybe the prices are improving from here onwards. Let's see what other chemical companies post on.
Just very quick question. Did you say Aarti Industries has guided to 1400 to 1700 crores of EBITDA? Because in FY24 they have done 975 crores.
Yes, Niraj. So in FY24 also they had guided around 1000 crores of EBITDA, where they fulfilled it. And today itself we spoke with the management wherein they've guided the numbers.
1400 to 1700 crores. That's a 40 to a 70% jump in EBITDA.
Yes.
Wow. Okay. Great. Varsha, thanks for that. Tamanna, that's significant if the operating profit margins inch up from where they are to where they could be, because I think March 2022 their EBITDA margins were 28. That was a rosy blue cycle, but they're at 15%. If they improve that a little bit, it'll be great for the company.
My question is that we've been waiting for this cycle to turn for a while. So
we're seeing the volume growth now.
Yeah.
Let's see if the pricing power comes back.
Yeah, so FY25 may be the turnaround. Yeah, all right, we're almost at close. Himin, very quick BTST calls or STBT? All right, we'll try and, get that take for you. But you're looking like you're closing in a pretty good steam, considering the kind of market that we had this morning. Niraj, one would reckon that maybe the mood has changed, at least for the day. The big question remains whether you sustain. You're closing in the green, at least for now.
And that's a big respite. So we're closing well, and that's a good sign. The question is, can we build on from tomorrow? So let's quickly just get the heat map up on the screen. Because we're doing well. We know that we've done well for the day today. Let's just see how we are closing and what stocks are leading the charge and what stocks are not. So it's the same set of names, but for the fact that HDFC Life has perked up in trade, so 3%, the Adani twins are right up there, 3% apiece. They were 2.5% when the markets, when we started off the show. HDFC Bank is still in the top 10 gainers. So that's essentially the list of stocks which are doing well, but giving HDFC Bank company or ICICI Bank and Kotak Bank. What's not doing well? Tata Motors, BPCL, Shriram Finance, Coal India, NTPC. So some of the PSUs have certainly pulled back in trade. Actually, I can see 5 PSUs in the top 10 losers, and that's quite a staggering statistic. That the PSU index probably hasn't done well. At least that's the large cap pocket, Tamanna, but the broader end, a lot of result reactions as well.
All of it result reactions, and you have at least the Nifty Mid Cap 100 up in the green. The small cap also, small cap still seeing a bit of pain over here. But let me just quickly pull up your top gainers and losers in the S&P 500 to give a sense of what really has moved. And you're right, Niraj, it's largely been about results. I mean, ABB India, the star in that sense. Dr. Lal Path also on the back of numbers. UPL. Also, Siemens, like you said, maybe the ABB effect that you're seeing over there. So that's the story as far as this side is concerned. I'm intrigued by Hindustan Zinc, which continues its up move unabated. On the losing side, of course, Bank of India again, numbers, Tata Motors. I don't know if they deserve that beating, but obviously that concern remains as far as they're concerned. I would say the Pharma pack was the other gainer of the day, and not just a Cipla across the board. And Aurobindo Pharma, Lupin, Divi's, Piramal Pharma also did fairly well in that space today. I just want to close off by seeing what happened to Zomato finally with all of that seesaw and up and down. I mean, that stock had quite a volatile kind of a last 15 minutes of trade, but closing down in the red, about 2.5% down after that, crazy up move it's seen over the last several months. The numbers perhaps not what the street expected.
Yeah, but a staggering day to my mind, simply because it looks so bleak at the start of the trading day, if you will. But I think it's ended well. And if the index can build on from there, a lot of shorts in the system.
Yeah.
Let's see if there's a bit of
I mean,
the
trick and the challenge is really to sustain through the week. We're only on day one of a very, very interesting week.
And a long week, 6 trading days. Because Saturday is a working day.
Yeah, Saturday is a working day. I'm wondering what the turnout number would be at the end of the day today and end of the evening, and that might also determine some of the mood of what we see tomorrow. So that'll be one important factor to see. But remember that big interview on NDTV network, Amit Shah speaking about how markets will respond and a whole host of other things. Prime Minister Modi has spoken exclusively. We have so much going on the channel. So for now, it's thank you from Niraj, me and the entire team. But stay tuned. So much more on the other side on NDTV Profit.